Hi, this is Kerry Artek with Wicked Stocks, bringing you big picture analysis in both the NASDAQ-100 and SP-500 indexes. I'm also going to include some QQQ, that is the NASDAQ-100 ETF, and SPY, that is the S&P 500 ETF. I'm going to be comparing the two charts. You're going to see how similar they actually are. Before we jump into the charts, just as usual, I want to ask you to please click like if you like this video, if this supports your trading, your ideas in trading, if it provides some insight. Please click like. It really does help us in being noticed on YouTube. And subscribe. Subscribing to the Wicked Stocks YouTube channel will provide you notification each and every time new content has been uploaded to the Wicked Stocks YouTube channel. We put out at least several YouTube videos a week. We also, by the way, have a daily SPY report and a daily QQQ report, a 5 to 10 minute video on both the SPY and the QQQ that goes out daily. It's a subscription-based analysis. It's informative, provides you with exact and specific price support and resistance levels, price targets. Much of what you're going to see in this video is what I do every day in the SPY and the QQQ, and you're invited to take a look at wickedstocks.com. We provide analysis in either the SPY or the QQQ, daily video analysis for $25 a month, and for $40 a month you get both combined. And for the time being, through the balance of March, we're offering half off that subscription. So if you go to wickedstocks.com and you fill out the premium membership form and you choose to subscribe to the daily QQQ and the daily SPY, it's $40 a month. In the coupon area, just click half off. All one phrase, HALFOFF, all capital letters, and you will have half off your first month. Let's jump into the charts. This is the NASDAQ-100 ETF, otherwise known as the QQQ, and this is a daily chart. I'm going to go showing weekly chart as well. This channel bottom, we settled below actually a week ago. I'm actually recording this for Monday, March 4th. On Monday, March 7th, we settled below this channel bottom by a full 1% margin. Now, if you back up a little bit on that chart, about 2 weeks earlier on February 23rd, we also closed below that channel bottom, but well inside the 1% violation threshold necessary for sell signal validity, technical clarity, as I call it. But that did emerge a week ago. And so the NASDAQ 100 ETF, the QQQ, remains in the confines of a longer-term sell signal that I'm expecting to play out through the second quarter. I'm ultimately expecting that 261.01 long-term rising speed line. This long-term channel bottom is 2 years in the making. It has been violated, and I think we're now shifting from a mere correction off the November high to an actual bear market. That's what the NASDAQ 100 ETF QQQ is telling me. The 50% downside retracement at 286.86 off the March 20 low is in reach, I think, over the next month or two. And over the next 3 to 5 months, 261.01, this true, so long as we continue holding below the 335.04 long-term channel bottom. Now, the index itself, this is the daily chart of the NASDAQ 100 index, the NDX, and it has also settled below its long-term channel bottom on the very same day by the very similar percentage. It's at 13,765.54 on Monday. I'm going to give you the weekly number in a moment. This is our ceiling through Q2, and below which the NASDAQ 100 index and the QQQ are heavy into and actually through the second quarter. Beyond heavy, they're bearish, okay? 10,710.65, that long-term speed line well below the market, is anticipated over the next 3 to 5 months. The index itself has also shifted from a mere correction into a bear market, and that happened when we settled below that 13,765.54 long-term channel bottom. The 50% downside retracement off the March 20 low at 11,768 is expected as well over the next month or two. 10,710 over the next 3 to 5 months. All of these numbers, well, 2 of them are changing daily. This is a daily chart. That 50% downside retracement is a static level that will be there. through the second quarter. Now, I'm going to zoom in here on this chart, and I think it's worth pointing out. I think this is a lesson also, not a lesson, but I'm just trying to create some information on how to use the 1% rule that I've used for years, and I mention in my videos all the time on long-term line studies. If we settle below that long-term channel bottom by a full 1%, like we did on March 7th, we have a valid long-term sell signal. If we settle below it but inside the 1%, we do not have a valid long-term sell signal. That happened on February 23rd. Let's zoom in here. This is the NASDAQ-100 index. This is the daily chart, and I'm going to show you how, I don't have it labeled, but that 0.5% slip on the left was on February 23rd. We slipped and settled below that line study inside the 1% zone. It was 0.5%, and then we came back. The next morning, we actually opened lower, but we rallied back, closed clearly above it, so we never had a sell signal. And then a week ago, March 7th, we settled clearly below it, as you can see. And then we rallied back 2 days later, and we closed above it, but well inside the 1%, 1/5 of 1%, 0.002%. And so it was not enough to shake you out of a short position, or it shouldn't have been. Now, it may have, and that's fine. I'm just saying, in terms of my analysis, there's no sign that the market has rejected that sell signal unless it closes back above that line study by a full 1%. Until then, this market remains heavy. And once again, March 14th, 13,765.54 is our ceiling, really, through Q2, and below which we remain heavy over that time frame. Triple Q, same story. It looks like an identical chart because it essentially is. You know, on February 23rd, we closed right around 1/2 of 1% below that line study, no sell signal. We never closed below it until a week ago, March 7th. That was definitely outside the 1% zone, valid long-term sell signal. Once again, 2 days later, the market rallied back, and at the very end of the day, obviously, closed back above that line study, but by 1/4 of 1%, 0.0025%. And so not outside the 1% zone, inside the 1% zone. Had it settled back above that line study by a full 1% or more, it would have been a clear rejection of a long-term sell signal, which is, in essence, a valid sign of strength over the mid to long-term time frame. But we never got there. We're still heavy. This market, the Triple Q, remains bearish through Q2, below Monday's level of 335.04, and that is rising daily. Let's move on to the weekly charts. These are weekly numbers I'm just going to give you. Those same levels that I mentioned on the daily chart are this week in the NASDAQ-100 index at 13,733.07. The NASDAQ-100 remains heavy below that level, bearish, in fact, through Q2, anticipating the 11,768 over the next 1 to 2 months, and that 10,723 rising steadily over the next 3 to 5 months, so long as we continue holding below 13,733.07. Now, if we happen to close back above 13,733.07 by a 1% margin, that would neutralize that long-term sell signal. The market should show strength then as we continue into Q2. The clear indication of that would be a settlement this week above 14,233.64 in the underlying index. I don't anticipate seeing that, but if we close back above 13,733.07 by a 1% margin, even on a daily basis, that is a rejection of a long-term sell signal, and we should pretty quickly, possibly within the week, reach up to 14,233.64. That is a simple channel top that is dropping weekly, able to contain buying on a weekly basis, and if settled above, would then indicate, I think, not only a good low through Q2, but possibly a good annual low. We should then rally back into that high area from November within several months, and possibly on to new highs, actually, as we continue into the third quarter. But we're a long way from that right now. Bottom line here is the NASDAQ-100 remains heavy through Q2, below 13,733.07, and doesn't turn clearly and bullish in a pronounced way until we close above this descending channel top, which is dropping on a weekly basis. Here's the triple Q, same story. 334.25 is the ceiling for the entire week in the triple Q. We settled below it a week ago. We remained heavy through Q2. We are now in bear market phase, anticipating 261.32 over the next 3 to 5 months. If we were to close above 334.25 by a 1% margin, that is a clear rejection of that long-term sell signal. And with that, I would anticipate longer-term strength through Q2. The clear reversal, where momentum actually reverses entirely and we get into a pronounced rally, would be a settlement above 346.96, a channel top that is descending weekly, actually descending daily. I cover these levels on a day-to-day basis in my daily triple Q report, FYI. And so all of them are fine-tuned and precise support and resistance. And I would apprise you, if you are not a subscriber already, to subscribe to the daily triple Q report. Will provide you day-to-day analysis that is highly correlated with the underlying NASDAQ-100 index. It's not 100%, but it's in the 99 percentile in terms of its behavior relative to these line studies. And so I think if you're an options trader who uses the NASDAQ-100 for options trading, even if you trade the NASDAQ-100 E-mini futures, the NQ, I think you can use the daily triple Q report as a guide for your overall sense of directional flow and timing. So this is the weekly chart for the NASDAQ-100. I would be remiss in not mentioning the SP-500. This is the other shoe to drop, if it is to drop, which is to say the SPY, and the SP-500, which I'll show in a moment, has yet to enter bear market phase. It is still merely in a correction and is approaching and has approached long-term support. So the same line studies that the NASDAQ violated a week ago, the SPY is closed in on. It reached to within 1% of 3 weeks ago, as you can see here, but it is not closed below it. It hasn't even actually tested it. I think we're in for a test this week. That's my sense based on what happened on Friday with the late weakness. 408.68 to 411.64. Combination rising channel bottom and 1/3 speed line, both trend defining over the last 2-year time frame. This market actually remains bullish. It remains in a long-term bull market above 408.68 to 411.64. So this is, in essence, bottom-picking territory for the SPY. And the S&P 500 index, the same thing. It dropped within 1% of the same area. Now, as it turns out, the rising channel bottom and rising 1/3 speed line for the S&P 500 index are right on top of each other. So there is a slight variation, but you can see we dropped right around the 1% mark about 3 weeks ago, and this week 4132.3 to 4133.41. That is the combination rising channel bottom and long-term speed line that can potentially absorb selling through Q2, possibly the rest of the year. And from here, there's a strong argument to make that the S&P remains bullish through the rest of the year above this area, this despite what's going on in the NASDAQ. So there's obviously a contradiction. Either A, the NASDAQ is destined to reject that long-term sell signal, close back above those channel bottoms I showed earlier, and then start progressing upward as we move into the second and third quarters, or B, the S&P is just delayed what may well be a long-term sell signal in the S&P 500 itself, and it'll actually then be highly correlated with the NASDAQ in that sell signal. Let's take a look at what those indications would be. In the S&P 500 index itself, if we settle, this is a weekly chart, so if we close the week, Friday, March 18th, below 4132.3 by a 1% margin, which is 4090.98. If we close 4090.98 on Friday, March 18th or lower, the S&P has also set off a significant long-term sell signal. It goes from a mere correction into an all-out bear market. I would anticipate the 50% downside retracement off the March 20 low at 3505.24 within a month or two. This could get accelerated. There's a lot going on in the world, obviously, that could tip this in that direction in an aggressive way. And overall, I then would have a 3 to 5 month downside objective at 3163.54. That is a rising 2/3 speed line. So if we close below the rising 1/3 speed line, that is at 4133.41 this week, the rule of thumb with speed line analysis is if you close below the rising 1/3 speed line, the rising 2/3 speed line becomes your next objective. And that would be a 3 to 5 month target below at 3163.54. The same is true with the SPY. I can give you those numbers. The long-term support for the SPY this week, 408.68 to 411.60. This is bottom-picking territory despite what we're seeing in the NASDAQ. As far as the SPY is concerned, highly correlated with the S&P 500 index. Once again, if you trade options off the S&P 500 underlying index or the S&P 500 futures, the ES, I think you could actually subscribe to the daily SPY report and be well served in your sense of directional flow and timing. You'd be provided precise support and resistance levels throughout the week on a day-to-day basis in the form of a 5 to 10 minute video analysis, not altogether different than what you're watching right now. Bottom line, though, is if the SPY closes 404.59 or lower on Friday, March 18th, in other words, 1% below that 408.68, it is also set off a valid longer-term sell signal that should, over the next 3 to 5 months, yield 315.07 or that rising 2/3 speed line. On the way down, we've got 349.12 as a 50% downside retracement that should be reached by the end of May or sooner. And finally, let's take a look at the upside as far as the S&P is concerned. Quite a distance for this market to move. I guess the takeaway here is, as long as we're above in the index itself, this is the weekly chart of the S&P 500 index, as long as we're holding above that long-term support in the 4132, 4133 area, we can, over the next, 3 to 5 weeks, by the end of April perhaps, rally up into that 44.55 to 45.48 region. Those levels are dropping gradually. In the daily SPY report, I provide them daily. Those same formations are provided on a daily basis in terms of their key resistance, and that's trend defining essentially. The way I would phrase or frame this photo, if you will, or this illustration, is you have both long-term support at 4132.30 and midterm resistance way up above it, 45.48 even. We could trade inside that, fill that wedge out for several months. But once we close above 45.48 even, the market has indicated a good low for the year, and we should push on to new highs within a matter of 2 to 3 months. On the other hand, as I say, closing the week below that 4132.30 level, and I gave you the 1% violation a moment ago, would indicate longer-term bearish continuation through the second quarter. Finally, here's the SPY. The SPY levels to the upside also dropping weekly, dropping daily. The daily SPY report provides all of the numbers you see here on a day-by-day basis with the 1% violations, so you can get an early lead on long-term sell signals on a day-to-day basis. So the weekly charts are converted to daily charts, and these numbers are then more fine-tuned for support and resistance, buy signals and sell signals, short, near, mid, and long-term. So I'm going to leave you with this image for the SPY. Not until we close above 455 even, and that's not going to happen anytime soon, but we may well rally up into that area by the end of April, or in other words, over the next 3 to 5 weeks, so long as we're holding above long-term support at 408.68, that 445 to 455 area, able to contain monthly buying pressures. Once again, on this image, we could fill that wedge out for several months, but once we close above 455 even, good annual low, and we should push on to new highs within 2 to 3 months. I think I've said it all. This has been a long video. I appreciate you sticking with me. Consider going to wickedstocks.com, clicking on that premium membership, and becoming a paid subscriber to the daily QQQ report and or the daily SPY report. I do appreciate your time. Please click like and subscribe, and I'll be back very soon for another Wicked Stocks YouTube video analysis.